Good evening everyone and welcome to Admiral Markets webinar today 16th of March 2015. My name is Nenad and today we will see 5 different pairs and we will try to analyze this before FOMC meeting on Wednesday. So this session recap today is valid for today and tomorrow, and only if FOMC gave us a low risk entry, we may consider taking this setup on Wednesday, but primarily this session recap will be focused on today and tomorrow, because FOMC, I presume, will be very volatile, especially if there is a mention of a possible rate hike or eventual rate hike. We will see. But the thing is that if you witness today's price action, definitely a lot of pairs really are having so-called V-shaped reversal, which is a definite sign that the market is ready for a new momentum. If this is the case, let's say we are talking about euro, dollar and pound, we should be worried that these pairs can go more to the upside before we sell it, and I will show you where we have possible sell spots for euro, dollar, pound, and actually New Zealand dollar is a buy trade. I will also give you the setup for buy trade, and be very careful. Now we are having retracement. Look at euro dollar, for example. Look at Friday's price action and look at today's price action. Look, this is V-shaped reversal, and V-shaped reversal is the worst enemy of trend traders. Okay, we will talk about it. Now let's see standard risk disclaimer, then we will proceed to last week results and today's setups. So session recap 16th of March 2015. Risk disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting this risk disclaimer, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MK's opinions, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So, with having said that, I just need to remind you about Admiral Markets bonus. So basically you need just to definitely go to Admiral Markets website and sign up for the bonus. You need to do 0.25 watts per each euro bonus, and 180 days should be completed for the bonus. Okay, so don't forget about the bonus. So if you plan to invest, do it now, because you will be getting a bonus, which is actually a good thing. Okay, last week, okay, let's see what we had had last week. But before we go with that, I need, for all newbies and new traders who are coming to these webinars, need to give a quick resume of these session recap trades. Okay. Cable, Yen is asking, you mentioned last week your target was 1.45 for cable. No, not 45. I said it could go, but my target was 47.20. So if it breaks 47.20, it can go to 45. But I'm not so sure that we need to see FOMC definitely. I don't think in next 2 days we can see 1.45 on cable, really, before FOMC. The price will range a bit, and we should try to sell it higher, okay? So you need to give price a breather.
So that means that you enter within 5 to 10 pips of the predicted level if it's in agreement with your system. Respect your stop loss, okay? If you are selling, usually add a spread to your stop loss. If you're buying, then you add a spread to your pending order or buy order, because always it's how we do it. So we are adding the spread to our either stop loss or to our buy position. Usually when you buy, you don't need to add the spread to your stop loss. Position trades are trend trades. Alternative trades are so-called counter trend trades. Breakout trades and scalp trade levels are done independently. You can deem that as a second entry. Usage of trailing stop is highly recommended, okay? These setups are valid for today, tomorrow, and sometimes the day after tomorrow, but occasionally we can, as I said today, this setup which I will be presenting you will be valid for today and tomorrow. I don't advise trading on FOMC, okay, on FOMC. Yes, Alec is saying New Zealand dollar is on its way to 74.30. Yes, we will see. I'm bullish now on New Zealand dollar, so I have prepared for you buy setup for New Zealand dollar. Now, scalp trades should be done at very close or important support resistance levels. As I said, those are calculated by historical levels plus Camarilla. You can add these levels to your system. Okay, guys, add these levels to your system. They will surely help you. Pay attention to my Twitter updates, because very occasionally I update Twitter, and very often you can see that my Twitter is saying, okay, maybe it's time to get a profits or whatever. So if I do a reverse setup, then definitely you can do it too. And pay attention to Twitter updates. For all of you who still do not follow me on Twitter, my Twitter handle is Tarantula FX. So it's my Twitter handle. Bob is saying that he cannot hear me quite well. Can you guys confirm if the sound is okay? I did a sound check before we begin, and Bob, I am seeing all comments are that sound is good, and in UK also. So I presume, Bob, that you live in UK, and if you're having sound problems, you can restart and rejoin, please. Maybe, I know that sometimes connection can be in between different internet service providers, can be a little bit nasty, especially, guys, if you use wireless connection. That can be a problem for you. I personally have wireless setup in my office, but always when I do webinars, I use LAN cable and wired setup, okay? Yerg is saying behind Chinese internet wall. Yes, sometimes you need to use proxy for bypassing these internet firewalls. Okay, pips pool. The term pips pool is the maximum available number of pips you could have got on recap entries. So we use the term pips pool. Pips pool, always, guys, pay attention. When I say pip pool, that is the maximum available number of pips. It doesn't mean necessarily that I took all of the pips. It's usually that we could have made that number of pips. Yeah, we could have made that number of pips. Okay? Okay, as you can see, session recap results. Ilya is asking, have I missed very much? Guys, I can see that a lot of people still coming in to this webinar. So guys, you haven't missed anything. I was only saying a few words about risk disclaimer, so actually you didn't miss anything. Don't worry. Okay, I can say be calm. Don't worry. Okay. Okay, guys. Euro dollar didn't qualify for our entry. GBP dollar gave us 180 pips. Yeah, it was basically only pound. Australian dollar didn't qualify. New Zealand dollar didn't qualify, dollar CAD didn't qualify. What can I say, guys? A total of 180 people. Well, sometimes it happens. Not all setups have been qualified, but the good thing is that actually we took some money, and it's actually a good thing. Yerg is saying thanks for 130 GBP dollar. Yeah, I'm glad that you made some money. Okay, this is what Yerg is saying. And 2 lots. You are very brave. You're very brave. And Justinias is saying 100% accuracy. Only one came to zone. Yeah, sometimes, guys, it happens, but not always. I'm not always 100% accurate. It's normal, because if I was 100% accurate, that wouldn't be normal, right? No one is 100% accurate. No one. There isn't a trader in this world who can be 100% accurate. There will be always trades that we will miss. And even if I was 100% accurate, I would still be probably doing this job, because I want to help you. Greg is asking, do you know what entry level you got in on cable? On my chart, I didn't get an entry near 51.50. Yes, it was 51.37.38. So actually, it was 12 pips from our entry. I will be showing you that. So even though if you came in a little bit later, this could have been good setup, but actually it was I think 51.38. I will show that now. So euro dollar didn't come to our POC. Euro dollar, look at the time of the webinar. This was basically our entry. Now what I'm saying again, sometimes, guys, I know that you want to take these trades, and most of the time, well, very I can say big chunk of time, these setups will give you entries. For example, usually 4 or 5 those setups will give you entries. But sometimes it can happen, as in this example, that we will not get an exact entry, as we didn't get any on euro dollar. But the thing is, use this analysis as a guidance. So let's say that you have your own system which you trade. And if I say, guys, that you should try to sell here and the price didn't pull back, maybe your system will still give you some trades, because I say euro dollar is in downtrend. So watch what trend is saying. That means that you should try to take short entries on euro dollar. So even though if my Camarilla MACD analysis is good, but it doesn't give me an entry, because the price, obviously, I don't have a crystal ball. I cannot tell you every time that it will make a pull back to the entry zone. Use the guidance. Try to scalp. Try to do breakout setups. Sometimes we definitely cannot have a pullback to the zone, because my style of trading and the style which I generally teach how to trade is wait for the pullback before you make an entry. If you don't wait for a pullback, then try to use a scalping entry. So let's say that you have missed this entry, as I already missed it, but it says it's in downtrend. So we are taking short setups. This was clearly breakout retest level, guys. Yes. And yes, and Novak Goran is saying, despite your goodwill and intention and good examples for and trades for the last couple of months, definitely Forex is very unpredictable. So yes, guys, Forex is always unpredictable. I didn't really think that today will be V-shaped reversal on euro dollar. It happens sometimes. That is why we use a stop loss, right? That is why we have our stop loss. Stop loss is not just for you know, showing other people how you trade. Stop loss is
basically about protecting your account. So you can see it here. This was my probable entry, and I was waiting for this setup. The price, this was the time of the webinar, basically the price stayed at the level, but you can see it here. You could have taken breakout setup. I cannot predict this breakout, but if you are price action trader, you can clearly see that this level is broken here. Look, this is double bottom, this is triple bottom here. Look how many bottoming it was before it broke the level. And then this level was retested. Again, this was continuation trade. So if you have taken trigger happy trade, you would be in profit. If you've taken this retest, continuation, whatever you took, this is obviously it's in downtrend. And just try to go to the target. And the target was hit. What did I say? 1.0850. It was hit. It was hit after the breakout. You need to pay attention to that. GBP dollar, this was the only trade, and this was the top, 51, 37, 6, 38. If you're late here, you have a shooting star. Shooting star closed 20 pip from 51.50. So this is good trade if you have taken it. I took this trade, and I took it exactly. I took it at 35. And basically I didn't get all pips, but the thing is it hit our target. I was stopped out here approximately somewhere in this region, so I was good for 25 pips before I was stopped with a trailing stop. But the thing is, you can see my position was 51.50, price came 12 pips from the entry. Okay, 12 pips from the entry, you have a little bit of spread, right? 1-2 pip of a spread. So it was very, it's almost within the zone, 10 pip buffer. I always say 12 pip is also okay, it doesn't matter 1 or 2 pips. If instead of using 0.5, for example, lots on this trade, if you go with 51, 30, 32 or 36, you go with 0.2, and if it comes within 10 pips, you can add 0.2, right? It's about your risk management. So this was the only trade which gave us entry within the buffer, and definitely it hit our target. It even went down. It went to 47.20, 46.98, I think. But still, it doesn't matter. If you took 20, 30 pips from this price level, it's still okay. Australian dollar sell around 77.60. Unfortunately, same thing. The price didn't make any pullback, and it dropped instantly. But again, guys, it was a cue for you to go down. It's in downtrend. This was previous swing. After the swing was broken, even here at this point, this was retest trade. Look, retest and down again. Okay, but we didn't make any. I didn't make any pip out of it because the price primarily didn't pull back to position sell. Position trades, guys, are trades which are trend trades. Alternative trades are counter trend trades. Sometimes I may post only position trade because if the trend is too strong, we are not so sure that we should go with counter trend setups. Okay. New Zealand dollar, same thing. Again, downtrend. Sell 74.20, 74.20. This was the time of the webinar. Price didn't make pullback at this point, but it was a pullback 3 days later. today, let's say, is 9th, tomorrow is 10th, day after tomorrow is 11th. Well, guys, on 12th of March, this happened. So again, what I'm implying, if you see my analysis, use your common sense. Even though if this setup was not hit during the time when I was going to place an order, and that is today, tomorrow, and day after tomorrow, pay attention. Usually my analysis is 80% correct, approximately. And if you see this, try to spot reactions. Yes, Greg is saying made some bucks on this. Look at this. I said sell at 74.20. Look at the rejections. Now pay attention to price action. This is complete price action trading here. I also took some pips on this because I saw 6 rejections of 74.20. Okay. Yen is asking what pullback means. This is pullback. This price is dropping, and it makes a pullback. So pullback is retracement. Pullback is equal to retracement. In English, we call it, it's a synonym. Okay, pullback or retracement. Pullback is when price is magnetically pulled towards our retracement and POC zones. It's pulling back, okay, as in this example. So these are rejection candles. These candles show you that at 74.20 there are now momentum sellers who are trying, basically who are trying to sell the price, who are trying to reject the price of this zone, 74.20. You see? Ilya is saying info for yens, pullback can be estimated with Fibonacci. Yes, it's a retracement when price is pulling back. And this, you can use my analysis, even though if it's 3 days after, just to see what can happen around the zone. And in this example, you can see what happened actually. The price was rejected, you can see, and look where it went. Where it went, guys, 120 pips. But because it was a little bit late, I don't count this as a trade. Dollar CAD also, what I said, buy. The price didn't pull back to this zone. So I waited for the price to drop to this zone, 25.40, and then to buy it. But the thing is, it proceeded with buy momentum without giving us sell, without giving us a retracement. So when you see that price is having still a momentum to the upside, that means that you want to see a loss of momentum. A loss of momentum is retracement. Once the price loses its momentum, then we consider that to be a retracement. So in this example, we can see a retracement, but the retracement was not big enough for our pullback entry, okay? It wasn't enough for our pullback entry. So that is, guys, why I'm always saying, wait for a proper pullback. If the price is not giving you retracement, that means that the price is still in a bullish momentum. And you don't want to take any trades when price is in bullish momentum. It needs to be a loss of momentum, so-called retracement, before we can make a next swing to the upside. I'm teaching you now how to fish, okay? Yen is asking what is the criterion to determine pullback zone. I am doing that. I have been always doing that with Camarilla MACD. It's my proprietary method. It's my system, and you can benefit from free setups. Of course, thanks to Admiral Markets, you can benefit from free setups and analysis of my Camarilla MACD, which I've been doing this every single day on Admiral Markets, Forex Street, Forex Factory, and these session recaps. Okay, that is my analysis, and then when I do the analysis, I give you all of these setups. Okay, and you should take entries which are around 10 pip, 5 to 10 pip buffer. Okay, Camarilla MACD is the method. It's not the system, it's the method, and it's a comprehensive method for professional trading. So this is what we had last week, and now it's the time, guys, to see what can happen in next couple of days, because all of us are intraday traders, and as I always say, we want to take setups which can give us money every single day. If they don't give us, if those setups do not give us money each single day, then we can benefit at least from one trade, two trades in 2 or 3 days. And we usually want to take these intraday trades because they are usually very, very profitable, especially when we have a good trend. Today, as you can see, we have a V-shaped reversal on the euro dollar. Now I will switch to screen. First potential trade is sell around 0.660 with stop loss 0.690, target 0.550. Okay, why do I think that? I will show you now. You see probably my screen. My screen is showing now the chart, and it's actually the chart from euro dollar 1 hour chart. So you look at this pattern. This is V-shaped reversal. The thing is, with V-shaped reversal, if they happen, they are they can be very dangerous, really, very dangerous. And because they are dangerous, we do not want to take any of setups which are not very clear. If we do that, guys, then we need to be very careful, because those setups can really hit our stop loss very quickly. What happened today, I did the analysis with Forex Street, and I didn't see this V-shaped reversal. I didn't see V-shaped reversal kicking in. By the time I was doing the trade, definitely there was a strong, still it was strong momentum to the downside, and I really didn't think that it can go this way. But there is a thing with V-shaped reversals. You can basically try to short it at this point, and that thing I explained on Forex Factory. I will show you the screen now, and I advise you to read through my Forex Factory. This is what I said. Okay. The problem is, when V-shaped reversals happen, the only trend setup is shorting at the previous stop of the V. Euro dollar is close to 160.35. Guys, believe me or not, I have shorted 2 times euro dollar with strong lot size on each pullback toward 60.35 today. And I got some nice profit which covered this loss which happened today. I will show you what happened today. This was basically what happened today. And I will show you now the screen. Just let me switch the screen. Okay, it doesn't matter, we can use this screen. So look at this cluster of rejection forming at POC. This was my analysis, And unfortunately, it didn't happen from this point. It was up. And that is the thing, guys, when you want to deal with V-shaped reversals. They are very, very dangerous. But look at this now. Look at this. Look at this now. This is V-shaped reversal. Okay? This is a V-shaped reversal. Pay attention. This was the top of the V letter, right? It's called V-shape because the V-shape reversal is actually V-shape. It's not inverted head and shoulders, okay? So this is a V-shape. And actually, it always needs to follow this same pattern, V. It's not like this. This, then you have some sort of, I will show you like this. Let me just, it doesn't matter, okay? Like this and then this. It's V-shape. It doesn't have a lot of bottoms. Look, straight from this point, it went to the upside. Straight from that point, guys. Okay? Straight from that point. Then what happened? Price got close to this level. And we can try to sell it. That is a trick for you. If you want to have a low risk trade, you can trade this V-shaped reversal as scalp trades. So first entry was here, then second entry was a little bit at this level. So I was basically trading 20 pip stop loss as a scalp trade. Next thing, I want this V-shaped reversal to be exactly what it is, V-shaped reversal. So it needs to break this high here, and the actual high is 60.35. If it breaks the high, it will give us some sell opportunities here, guys. Look at the perfect confluence at the setup I was giving you. Look at the perfect confluence, guys. What did I show you, guys? 0.660, 0.690, okay? I'm not sure that Draghi today will, maybe there will be some sell. I'm not concerned what Draghi will be speaking today. I think that market is very, very, very focused on on Wednesday FOMC, guys. So I'm not sure that there will be some big impact on after speak, but definitely you should be paying attention to your trades and trade setups, okay? So this is V, this is U. So it's not V-shaped reversal, it's not the same as U-shape. Not U-shaped reversal, but actually this can be double bottom or triple bottom, and this is straight from this point. So now I'm seeing this setup. Sell at 60.60. I will be showing you euro dollar. So we can try to sell at this spot. Look at the confluence. We have also previous breakout retest here. And if the price pulls back to this place, I think we can have some nice intraday position. Now, if we have a good momentum in our favor, we can expect again 1.0550. So actually, if it drops with a good momentum, we could go for this target here. Because at this place, it is at this place where the price has made V-shaped reversal. So I actually want this to go up and then to sell it. And it's only 30 pip stop loss, guys. It's only 30 pip stop loss. So actually I would love to see this setup. If this setup does not happen, well, try to go short at least close to this level here, 35, and try to see what can happen. For buy level scalp, this is the level 1.0550, so 1.0550, this is the level for scalp. And for sell, definitely this is the level for a scalp sell. Okay, this is the confluence of historical buyers, now historical sellers, and probably now moment sellers. And this is the place where the price was rejected in the past. And when you're trading price action, you always want to see where the price was bought into or rejected in the past, because the history always repeats. So this is the setup for euro dollar. Okay, euro dollar setup. I would love to see this. Pound 48.50 is sell, 49.00 is stop loss, 47.20 is the target, 47.70 is buy scalp. I would love to see, and actually while I was having this webinar, my pending order got hit on pound. I can see that the confluence was reached. Now you can check with the price, guys. Yeah, yes. My pending was hit, exactly. I had my pending at 45 and this 1 hour candle hit the zone and now it's rejecting. But I think that there is still possibility for the price to retrace. And look at this, why I'm giving you this setup. It's logical. Breakout retest point, okay? So actually this was a previous breakout. The price has hit 78.6 breakout confluence and now it's going down. I will actually treat this now as a potential scalp trade because it's the end of the day. But still, if this pulls back to this region, my stop loss is at 49.00. So actually it's 50 to 60 pip stop loss. We target at 47.20. And if FOMC will give us the cue for rate hike or something, I think that there will be another sell-off. Yes, this is also a form of V-shape reversal. It's not as strong as in euro dollar, but it's still a form of a V-shape reversal. Now, if the price gets into this level, Goran is asking, can it jump more? Yes, but the thing is, it can be rejected. As we can see, this it's still happening, the rejection. So it can be rejected, but it also can proceed to 48.80. Stop loss is 49.00. So if you get a better entry, you can go with that entry. Okay? It's always how you basically manage the trade. I'm in this trade obviously, and as the price has hit pending, but the thing is, I would really love to see, I don't love to see entries happening while I'm having the webinar, because usually now it's end of day and usually the price is doing nothing now, and I will close the trade and wait for another entry. Okay, so let's see if we will get another push to the upside. 49.00 is actually where we can place our stop loss. Okay, and let's see if we will get some pips. So is the plan for GBP dollar. Okay, now let's see Aussie. 77.70 my plan for Aussie. Let me see if I made a mistake. 76.70, guys. Sorry, I will correct this now. Let me just correct it. I will just make a little pause. 76, 77. Yes, this is how it should look. Okay. Okay. So Australian dollar 76.70. 76.70 stop loss 77. And again, this has been activated, but it's still not the price has still not go far away from our entry. 76.10, 75.80. And look at this, why I think this can be a good setup. The price is still making the same thing. It's not V-shaped reversal, but it's actually going slower to the upside, grinding slower. So when we want to take trend-based setups, we obviously want to see price grinding slowly to the pullback zone and then rejection. So this is actually the zone 76, 60, 70 here. You can go with a little bit lower risk now. At this point it's 15 pips from the exact spot, but pay attention that your stop loss should be 77.00. So you can use, I can say, lower the leverage, just half your leverage. If you're using 0.3, let's say you're using 0.5 for your entries, you can go with 0.25 because the price is rejecting from the zone. Look, and I think it has the possibility to go to 76.10, definitely, okay, and 75.80. Okay, guys, that is for Australian dollar. Now New Zealand dollar, 73.20, probable sell. 72.50 is stop. This is buy, of course. Again, I made a mistake. I will correct this. So position buy. Buy around 73.20. Okay, you can see this. I have corrected this. 73. You will see the slides. You will see the slides now, don't worry. This is the slide. 73.20, guys. 73.20. 72.50 is stop loss. 75.15 is the target, okay? Look at this. The price is trying to make what? How we call this, guys? Do you see the pattern? Does anyone know which pattern we are seeing at the moment on New Zealand dollar? Just tell me which pattern you are seeing at the moment, guys, please. Do you see the screen? Sorry, I will switch the screen. I will switch my main monitor, okay? Do you see it now? You should see it now. So it's head and shoulders, exactly, reverse head and shoulders, guys. JD is saying cup and handle, dead cat bounce. Well, this is inverted head and shoulders. This is inverted head and shoulders. If it stopped at this point, if we didn't see this here, this can be cup and handle. Exactly, JD. So you're not far from right. This could have been cup and handle if the price didn't make this. This is V-shaped reversal, guys. Look, this is scholastic example of V-shaped reversal. Look, the price instantly made an up jump, I can say. Look, without any consolidation from this spot. This is an absolute example of a V-shaped reversal. Look, and that was done after Reserve Bank of New Zealand decided to hold on to rate cuts. So basically, this was bullish price action. And this is left, this is head, this is right. The exact spot is 73.20. Why 73.20? Because look at this, okay, price action. Rejection, rejection, sell, rejection. Look how 73.20 is holding the price. So I would really love to see some nice pullback. This is 1 hour time frame, Greg. And if the price makes a pullback to 73.20, I think that we can see a nice rejection. Now, obviously, because the price is too overstretched to the upside after Reserve Bank of New Zealand decided not to cut any rates, we need to place our stops a little bit lower at 72.50. Okay, 72.50. So my plan is to go long at 73.20, 72.50 stop loss. Target is 75.15. And I think that New Zealand dollar has a potential uptrend resume. Now, obviously, we need to be patient, and I don't recommend holding on to trade during FOMC. FOMC can be, and it's known to be, very, very volatile. Okay? Yes, 75.15, maybe 75.50, but my primary target is this one for this move. Okay? 75.15, 15. FOMC will happen on Wednesday. It's the day after tomorrow. Okay? Okay, so this is what we want to see, a rejection and then bang to the upside. Dollar CAD is the next setup. Dollar CAD, I see buy position at 27.20. 26.80 is stop loss and 28.20 is the target. Okay, we want to see this kind of price action, guys. Okay, we want to see this 27.20, 26.80, 28.20. This is the setup for dollar CAD. Okay, and I want to see a pullback to 50, retracement of the fib. Here we have a lot of rejections here, and actually if the price makes a pullback to this zone, it will be a stretch of a new trend line here. Okay, so I would really love not for the price not to stop at 38.2, because I want to see 50. This zone here, a lot of buyers here, a lot of buyers here. Look how many buyers, really a lot of buyers here. And 26.80 is stop loss. So we need to be patient and wait to see if the setup will indeed happen. Okay? So dollar CAD. This is what we could trade today, tomorrow, and maybe day after tomorrow, but only during London session. I don't want to take any chances on FOMC, because FOMC usually is screwing up with the trend, and then after they finish with that, the price can resume in our direction. Okay? Yeah, Greg is asking a question. Nenad, yeah, he asked this. Do you wait for confirmation candle? No. I trust my level. I trust my level. So, Greg, 90% of the time, I'm trading in the zone. So I want the price to enter within the zone and then sell it. It can happen, or buy it. It can happen on a living candle. The only exception is that if I miss the entry, for example, as in New Zealand example, I will show you this. I will show you New Zealand dollar example. So the only exception is, for example, if I miss my entry, as I did in last week setups, and then I can see this rejection candles. So basically the only thing is, if I see rejection candles happening at the zone or at the level, I can take after the rejection. But the thing is, most of the time is, not most, 90% of the time, I'm doing it when the price is pulling back within the zone. Because trading within the zone is usually the most profitable one. It gives you better chances to grab on pips. And look at this now. You look at euro dollar. If you have waited for a confirmation here, you would have lost this trade. Now pay attention. I have been selling at this spot. 2 trades I made today selling from these spots after I was stopped out from this trade. And this was actually in the profit, 20-25 pips once it happened. But the thing is, I didn't take any profit. I took profit from these scalps here. And if I had waited for this candle confirmation, I would have lost a trade, because look what happened afterwards. So that is why I wait for the price to come within the zone, and I sell when it hits the level, or if it 5 to 10 pips from my level, then I sell it. I trust my analysis, and I don't care really if the price will make a subsequent shooting star or not. When the price hits the zone, I sell it. If I miss the trade, then I can try to go with. But look, usually these kinds of rejection, because we are doing this, guys, this is another perspective of trading. We are not trading candlesticks, right? We are not trading candlestick patterns. What we do basically, we are trading the price. And that is why zones are important. We are trying basically to enter within the zone and then try to buy or sell within the zone. If I traded candlestick, that would be another system. And I will actually be teaching you how to trade candlesticks. Candlesticks are not traded this way. Candlesticks are traded other way. And not all the candlesticks are tradable. So you need to distinguish from price action trading and candlestick trading. It's the same dimension, but it has a different approach. And I watch the charts a lot, really, a whole lot. Okay? If the price comes 5 to 10 pips off the zone, you either buy or sell. And that happens almost all of the time after session recaps, and you can witness this from the analysis. I always show where the price came and when the rejection happened. Always before standard webinar takes place, I always show last week results, and 80% of the time, 90% of the time, price gets in the zone and then gets rejected. But the buffer zone is 5 to 10 pips. Okay? Sometimes it's even to the pip. Very often it's to the pip. Okay? Yes, the zones are based on Camarilla pivot points, but they are also based on other things taking place, such as historical support resistance levels. I am really paying attention to historical support and resistance levels, because usually the price historically gets bought or rejected, and I really prefer to see historical confluence with Fibonacci and all other things I use for the analysis. Okay, I will be using a random example here, guys. Session recap of 2nd of February. This is always what we have. Always, always, always. I'm telling you prior week results. And you can always check that these results do indeed happen. As we had on 2nd of March 2015, sell 1370, exactly the price came within the zone, was sold. Here also the price came to the pip, but you cannot always go to the pip. That is why I'm saying 5 to 10 pip buffer. You can, all these setups are verified. You can see I'm not making up anything. They're always shown to the pip, but 5 to 10 pip buffer is always the safest way to go. Okay. For all questions, please you can email me tarantulafx@gmail.com. So my email is tarantulafx@gmail.com, and I will answer definitely. Okay. So this is, and you can watch all of these setups, of course, most of those setups for free on Admiral Markets. Just guys, pay attention. I will show you now. Pay attention to the analysis. I'm doing that each day. You can see the analysis on my blog, and you can always see the analysis on admiralmarket.uk website. So you can go here, admiralmarkets.co.uk, and then you go analytics, then you click technical analysis. Yes, my email is tarantulafx@gmail.com. You can see various analysis. My analysis always have watermark analysis by Tarantula, and that is, okay, what the analysis is about. Clear levels, everything is explained on this kind of analysis. Also, Admiral Markets blog, you can check on the blog. You just go to Tarantula FX and you can see the blog here. Also, you have Forex Street. You can go with Forex Street. Forex Street is here. And check all of these. Forex Factory, check all of that for my analysis. Of course, I will be keep doing that, of course, definitely. I think the bonus, Bob, is until the end of the March, but do not hold me for the word. I'm not sure, but I think it's until it started on the March 1st, but I think it will be for this whole month. So if you want to grab the bonus, please do it. Please do it, and you can tell Admiral Market Support that you have heard on my webinars for the bonus, and that actually I think it's still running, but just to be sure, you tell them that you have heard on my webinars, please. Yen is asking, for cable you mentioned that you have a target of 47.20 for a short. Does it mean you consider 47.20 as a medium bottom, a short-term bottom? Because if cable gets rejected, it can go to test 47.20 again. Okay, but today there is a lot of going on, especially because we will have FOMC in 2 days. Now the price is correcting just because of FOMC. Believe me, it's because of that. Dollar is correcting because of FOMC taking place in 2 days. Now we are witnessing a so-called correction. That is why we see this kind of price action. Okay, 47.20 we can have, but we need again to break. We need to break this trend line here after the rejection and then proceed to the target. Euro yen, I can check euro yen, and then we need to finish with the webinar. Euro yen. Same thing with euro yen. V-shape reversal. Yes. 29 can indeed be good for selling, so try to sell it. Justinas, try to treat that as a scalp trade, and I think if you manage to switch from a scalp trade to actually, okay, sorry for this, to actually intraday position, you can be basically good for a good amount of pips. Yeah, you can try to sell at 129, sorry. About the bonus, yes, one more thing. About the bonus, I will give you the slide now. Okay, just wait a second. This is the slide for the bonus. Use this opportunity to grab the bonus here. Let me quick search this for this here. So 50% on deposit, guys. That is the answer to your question, Yen. 50% of on deposit. So if you let's say deposit $1,000, you just go to Admiral Markets Lending Deposit Bonus, and you have a calculator to see how much of a bonus you will get for your deposit. You have 0.25 loss to complete per each euro bonus, and you have 3 months for that. So actually it's achievable. Try, just click this link, go this link, and enter the amount you wish to deposit, and you will see that basically how much of bonus you can get. And do not forget to tell that you have heard from webinars about the bonus. In case maybe, but I still think it's during this month. Okay. Modris is saying thank you for your work. Yeah, you're welcome. Okay. GBP setup, definitely GBP setup. This is GBP setup. Low. Yes, Justinas. Okay, guys, we have come to the end. So let's see what we can grab from these setups. Thank you. Thanks. Thanks, Bob. Thanks, everyone. Greg and company. Jan, Lo, everyone. Justinas, Ilya, everyone. Have a great evening. I will be with you very, very soon. Let's see if we can cheat on FOMC a little bit. If we can grab some money out of FOMC meeting and before that. I hope that we can do it. And of course, follow the analysis which I do every single day and grab some tips. Thanks, guys. Cheers. And as always, trade safe.